Welcome back. Today we are diving into a really interesting new report from Coinbase. They're taking a close look at one of the biggest questions in crypto right now. After all this waiting, is an altcoin season finally here? It's a phrase you hear all the time, right? People get really excited about it. But what does it actually mean? What are the real, concrete signs that tell us one is actually happening? Well, according to the folks at Coinbase, one of the biggest names in the game, that wait might be just about over. They think the market is starting to look perfect for a major shift. Okay, so before we start looking at the clues, let's get on the same page. Let's lock in a clear, technical definition for what we're actually looking for here. So this isn't just about a vibe or a couple of hot weeks. The report uses a very specific benchmark. For it to be an official altcoin season, a whopping 75% of the top 50 altcoins have to beat Bitcoin's performance over a 3-month period. That means it has to be a broad, sustained rally, not just a few lucky tokens. All right, with that definition in our back pocket, let's start playing detective. It's time to look at the first pieces of evidence that suggest something is starting to bubble up under the surface. And clue number 1 is a big one. Bitcoin's grip on the market is loosening. You can see its share of the total crypto pie has dropped from 65% back in May down to 59% now. That is a classic early sign that investors are starting to move their money into other assets. And that shift has had a huge effect. The total value of all altcoins has just exploded, up more than 50% since the beginning of July. We're talking hundreds of billions of new dollars, pushing the total to 1.4 trillion. That is some serious, serious momentum. But, and here's where things get a little weird. On one hand, you've got this massive 50% surge in market cap. But on the other, the official altcoin season index, it's just kind of sitting there in the low 40s, nowhere near that 75-point mark we need. So what gives? Why is the index so low when the market is so hot? It's a real puzzle. To solve this little mystery, the Coinbase report says we need to zoom out a bit. We've got to look beyond the crypto charts and into the broader economy, where a potentially enormous catalyst is just waiting for its cue. And it really comes down to this absolutely mind-boggling number, $7.2 trillion. That is a record amount of cash just parked in U.S. money market funds. It's safe, it's making a little bit of money, but for now, it's completely on the sidelines. So how could all that cash find its way into crypto? Well, the report lays out a pretty clear chain of events. The theory goes like this. Once the Federal Reserve starts cutting interest rates, those safe money market funds suddenly don't look so great. Investors will start hunting for better returns, and a big wave of that sidelined capital could come flooding into riskier assets, and that includes crypto. Okay, so let's get back to our contradiction. If this big wave of retail money hasn't hit yet, what is causing that 50% jump in the altcoin market? Well, it turns out the whole show is being run by one main character. And the report just comes right out and says it. This isn't your typical broad rally. Nope. This is a very targeted surge of institutional, big money capital, and it's all flowing into one place, Ethereum. And the sheer scale of this is pretty incredible. These digital asset treasuries, which are basically just corporate bank accounts for crypto-native companies, now hold over 2% of the entire supply of Ethereum. And to put a really fine point on it, just one single company, BitMine Immersion Technologies, scooped up 1.15 million ETH all by itself. We're not talking about small bets here. This is major strategic investing from some very big players. So if the big money is all focused on Ethereum, how does that light the fuse for a broader altcoin season? Well, it's all about the ripple effect and how a rising ETH tide can lift other boats along with it. The key here is a financial idea called beta. Now, don't worry, it's pretty simple. Beta just measures how much an asset moves compared to something else, like Ethereum. If a token has a beta higher than 1, it means it's more volatile. It basically amps up ETH's price moves, for better or for worse. And a perfect case study for this is the token for the Lido protocol, LDO. Right now, it has a beta of 1.5 compared to ETH. So in theory, for every 1% move that Ethereum makes, LDO should move about 1.5%. And you know what? That's exactly what's been happening. As all that institutional money poured into ETH, LDO went on an absolute tear, surging 58% just this month. It's a huge player in the ETH staking world, and it also got a nice little tailwind from some positive regulatory news from the SEC. Okay, so let's recap. We've seen Bitcoin's dominance shrink. We've seen a huge surge in altcoin value, but it's being driven by big money buying up Ethereum. And we have a $7 trillion pile of cash just waiting for a reason to jump into the market. So let's bring it all home with the final verdict from Coinbase. So what's the bottom line? According to Coinbase, we are not in an altcoin season. At least, not yet. What we're seeing right now are just the opening acts, driven by institutions buying ETH. But with those huge economic wins at our back, the report thinks a real, full-blown altcoin season could finally get here as we get into September. Which leaves us with the billion-dollar, or I guess trillion-dollar question. With the big money already moving and a potential flood of capital on the sidelines, are all the pieces finally on the board for the market to really take off this fall? That's what we'll all be watching. Thanks for joining me.